Jamal here from 8-Step So welcome to the next startup business tip of the day, and today it's going a bit more legal than things like mindset and motivation. These are of course business tips given to me by people who are running their own businesses, who are company leaders, who have been very successful in growing businesses, and of course my own experience as well. So today's one is basically don't ignore legalities when it comes to building your business. And there are myriad things I could talk about, but there are some real essential basics. As soon as you possibly can. I mean, obviously we're in different countries. If you're watching this in the UK, it may be more applicable, and obviously in the States things are slightly different, but wherever you might be, make sure you look at the legalities of actually creating your business. It is not sustainable for you to just take cash for any product or service you create. If you think you're going to get away with it, it's just not a good idea. Luckily, this isn't from personal experience, but this is from the experience of other people I've worked with in the past. Don't sell a product or service, just take the cash and then just don't declare it. You've got to pay your taxes, right? So keep your stuff legal in that sense. How you pay your taxes, obviously you don't want to do anything in terms of evasion or avoidance when it comes to paying tax, but you know, you need to be doing something that's legal with it. So a good way of not paying tax right up front, for instance, on income is, rather than it going straight to your own account for you to then declare and pay tax on, this is how it works in the UK and in most countries as well, you have your money go to your company instead. It's very straightforward, and you can buy off-the-shelf packages that actually will just set up a company for you. Have your money from your clients go to a company, an actual legal entity. You're not paying tax on it then, you will be paying tax on profit. Typically in the UK, for instance, there's corporation tax. At the end of the year you pay the tax on the particular profits you've generated. However, you know, if you don't retain your profits within the company and you use it to build the company, well, then there's no tax to pay on that, because that's just turnover that's used to then spend on other things for growth. So be thinking carefully about how you're going to do that. But also when it comes to the legalities, you should really think strongly about the type of company you want to set up. You know, do you need an LLC? Do you need, if over here in the UK, do you need a limited company, for instance? I at one point had a number of different legal statuses because I was consulting as well. So I had what was called a sole proprietorship, which was essentially being self-employed. So as a consultant, I had all of that set up legally as well, because I needed to let the tax office know that I was earning money in different ways, and you get paid tax in different ways as well. I'm not going to go into the tax side of things too much, because actually that's something you should be exploring yourself, but it's a strong tip to bear in mind that if you are receiving income through your business, just pocketing it is not cool, for starters. That's screwing other people, but also because the reason why it's screwing other people is because if you don't pay your taxes, then you're relying on other people to pay for things like roads, infrastructure, internet, stuff like that you're making use of. So you know, you need to, it will catch up on you. It's as simple as that. Okay, it's like with anything in life. If you try and screw a system, it will catch up on you. But in terms of the type or status of your business, the legal entity, you need to think about what that looks like as well. So does it need to be a limited company or something different perhaps? Do you need to have it, you know, is there importance in working with shares for the company if you're with a partner or something like that? All this kind of stuff is really crucial. So make sure you think through the legalities. But then it goes a bit further. Things like, for instance, if you have intellectual property, as in something creative you thought of, many people call it things like secret sauce, you need to protect that. So you need to look at trademarking. You know, if you put TM next to your logo or something, that it doesn't necessarily preclude people from using it, but it does suggest that that's property belonging to you, and you can go further and make things copyrighted as well. You want to think carefully about that. If you've got something really unique that you don't want anyone to copy, then you may need to do something like that. If it's a product, then do you need to have a patent on it? If it's something that's got a real twist on it that no one's done, you need to protect that kind of property as well. Because the thing is, you don't know how quickly you're going to soar. And if you look at the likes of Apple and Samsung, they've had a lot of horns being locked over patents and things like that. Everything from high-tech stuff to the shape of the mobile phone itself is being patented. So you're going to think about the same kind of thing with your property, your business as well. Most lawyers I've encountered would happily give you some kind of free broad stroke kind of consultation just to kind of begin you off, and then you can see whether or not you need to explore doing anything more concrete. But it's not safe to not think about the legalities of things. And a great example is, many of us know, if you read Sam Walton's book Made in America, Sam Walton, of course, founder of Walmart, which is the one of the biggest companies in the world, and as a business family, they are worth about 160 billion. This is bigger than Warren Buffett and Elon Musk and Jeff Bezos all put together, for instance. One thing that happened to him early on was he didn't check the legal side of a contract, which he had on a lease on one of his shops. The shop started doing really well. I believe it was either 50 or $250,000 a year, and this is decades ago. So then the landlord took the property because he had every legal right to do so. He kind of shafted him, but also it was legal. So that's what happens if you don't check the things you're signing off on. You actually end up potentially getting into big trouble, and in Sam Walton's case, literally having to start from scratch again. He lost absolutely everything, had to build up from zero again. So you should be thinking legalities in terms of checking contracts. If you don't understand them, get someone who does to look it over. But also, if you're going to enter into agreements with people, working with people, things like that, you need to think about having some kind of legal framework there as well. Working on, I've seen this a million times before, but partners that work on a handshake, it can unravel, and then you can end up when someone says, well, you said this, and then they don't remember it. Well, I said that, and then there's discussions about maybe things like equity. Well, I thought we were doing this 50-50. No, it was my idea, so I get 60% of the share of the profits, and you get 40%, and then it's a whole kind of argument, and that's how friendships often can fall out over business as well. So get this stuff nailed down. It may seem a bit strange, especially if you're working with one of your best friends or family members, but it's a sensible, wise way to grow. So don't ignore the legal side. More information tomorrow, another startup tip. Speak to you soon.